Imagine doubling, tripling, even quadrupling your money while you sleep. Think you need a fortune to start? Think again. Today, we'll unveil how even the most modest portfolios can grow at the pace of great fortunes. Forget financial gurus and complicated methods. We're talking simple, effective, proven strategies that could transform your finances forever. Curious about how this can be possible without a six-figure salary? Stay and discover how the right knowledge can be more valuable than gold. Get ready, because this journey could be the game changer you've been seeking. The wealthy aren't the only ones who can watch their money grow. In fact, most great fortunes started with a small step. Think you need a vault brimming with cash to invest? That's a myth. Let's see how ordinary individuals, with the most common of salaries, have managed to accumulate significant wealth. We can talk about that supermarket employee who, with an initial investment less than the cost of a smartphone, now receives constant dividends. Or the teacher who, by saving less than what she spends on coffee each month, has built a small empire that's bringing her closer to her financial freedom. These aren't tales from a parallel universe. They're achievable realities, and, in the next few minutes, we'll teach you how you can be part of them. With strategy and knowledge, your bank account could hold much more than you imagine. Let's debunk the myths and show you the truth about smart investing. Myth number 1. You need to be a finance expert to invest. The truth is, today there are tools and resources that simplify the investment process. The digital age has democratized finances, allowing even those who can barely distinguish a stock from a bond to build a diversified investment portfolio with just a few clicks. Myth number 2. Investing is only for those with large sums of money. This is one of the most common misconceptions. In reality, you can start with what it costs for a night out at the movies. Thanks to micro-investment options and platforms that allow buying fractions of stocks, your path to financial growth can begin with small but consistent contributions. Don't underestimate the power of compound interest over time. Even the smallest amounts can grow surprisingly. Starting in the world of investments might seem like a labyrinth, but really, it's all based on a few basic principles. The first is compound interest, often called the eighth wonder of the world. It's simple. Reinvest your earnings and they, too, will begin to earn income. Think of it as a snowball growing as it rolls downhill. The second principle is diversification. Don't put all your eggs in one basket. If one investment fails, you don't want your entire capital to vanish with it. By spreading your investments across different assets, like stocks, bonds, and real estate, you can mitigate risks and increase the chances of long-term success. Understanding these concepts can be your ticket to greater financial stability and, eventually, to economic independence. You don't need complex strategies or to follow the moment's trends. You just need to apply these fundamental investment principles to start seeing real changes in your wealth. If you think investing is costly, let me reveal a secret. The universe of low-cost investing is at your fingertips. Thanks to exchange-traded funds, or ETFs, and index funds, you can have in your portfolio the same companies that impress in the financial news, but for a fraction of the price of a complete share. ETFs are incredibly accessible. With just a small amount, you can buy a part of a fund that follows a specific index or sector. Want a piece of the tech sector, or perhaps diversify into renewable energies? ETFs make this possible without having to buy individual stocks of each company. On the other hand, index funds allow you to follow the performance of an entire index, like the S&P 500. Instead of trying to beat the market with risky investments, with index funds, you bet on the overall market performance, which historically has shown steady growth. And if you prefer an even simpler route, robo-advisors can be your perfect ally. These automated advisors build and manage your investment portfolio based on your goals and risk tolerance, all for a minimal fee. Also, don't overlook apps that round up your purchases to the nearest dollar and invest that change. It might seem small, but it's another simple and effective way to accumulate investments without feeling a significant impact on your daily wallet. With these strategies, low-cost investment is not just a dream. It's a tangible reality that can start today. It's not about how much you invest, but about starting and maintaining consistency. Patience and time will do the rest. The proof that low-cost investment strategies work is not just theoretical. Let's look at some inspiring examples that demonstrate their effectiveness. Take Lucas, whose salary was no more than the national average. He decided to start small, investing in an index fund with just $50 a month. Years later, that consistency has turned into a sum exceeding 5 digits, an amount he never imagined reaching when he started. Or consider Valeria, a freelancer who opted for automated investing through a robo-advisor. She sets her risk profile, makes a monthly deposit, and forgets about it. Her savings have not only grown but have also diversified without her having to lift a finger. These are just 2 stories, but there are thousands out there. Stories of people who started with what they had at hand and now see the fruits of their investments. Real people who, with small steps, patience, and a smart strategy, have seen their personal finances transform. And the most exciting part of all this is that anyone, including you, can start writing their own financial success story today.
If this video is opening your eyes to finance, hit like to support this channel and help us keep uploading more content. Comment on your biggest revelation so far and subscribe with the bell on so you don't miss any financial secrets. And if you have a friend or family member who could benefit from this video, spread the word by sharing it. Let's continue with more strategies that will change your financial future.
Beyond simply investing, maximizing your income is a crucial component to accelerating your financial growth. It's not just about how much you invest, but also how much you can start to invest. And for that, you need to increase your earnings without proportionally increasing your working hours. Consider the gig economy. You can turn your skill in graphic design, programming, or even teaching a language into an additional source of income. Online platforms allow you to monetize these skills during your free hours. Got extra space at home? Consider it for renting out through internet hosting services. You wouldn't just be making extra money, but also investing in hospitality and human connections. Even more traditional methods, like investing in your education and skills, can lead to promotions and better job opportunities. Every additional dollar you earn and don't spend can be channeled towards your investments, making your money work for you, and not the other way around. Remember, you don't need a large income to start investing, but by increasing your income sources and smartly allocating those additional funds, you're turbocharging your path to financial freedom. And so, with each smart decision, you're building not just wealth, but also a more secure and brighter future. Reducing and eliminating debt might seem like a distraction on your path to investment, but actually, it's a crucial step. High-interest debts are like anchors dragging down your financial progress. For every step forward with your investments, costly debt can pull you 2 steps back. Start with a simple strategy, the debt avalanche. Focus on paying off those debts with the highest interest rates first. Meanwhile, keep paying the minimum on your other debts. Once the most expensive debt is out of the way, direct that money to the next highest interest debt, and so on. Also consider consolidating your debts or seeking lower interest rates. Sometimes, timely negotiation with your creditor or transferring balances to a credit card with a low interest period can significantly lighten the load. Moreover, it's vital to avoid accumulating new debts while paying off the old ones. This means living within your means and avoiding impulse purchases. Take advantage of tools and apps to track your spending and maintain a budget that leaves room for investment. Remember, every dollar you free from debt is a dollar that can start earning compound interest for you in the future. By reducing your debts, you're not only improving your current financial health, but also paving the way for greater financial freedom. Becoming a successful investor goes beyond just knowing the best places to put your money. It's about developing a mindset that distinguishes between expenses and investments, seeing each dollar as a seed that can grow over time. Here, patience and long-term vision become your best allies. Start by asking yourself, will this expense bring me closer to my financial goals? Learn to differentiate between what you need and what you want. Every time you opt not to make an impulsive purchase, you have more to invest in your future. The investor's mindset also involves continuous education. Stay informed about market trends, but don't be swayed by panic during temporary downturns. Market history has shown that patience is often rewarded. The true power of investment reveals itself over the long term. Setting clear and realistic goals is the first step towards a solid financial plan. Whether you dream of early retirement, buying a house, or simply securing your financial future, each goal requires a specific plan. Assess your current financial situation and decide how much you need to reach your goals. Then, work backward to determine how much you need to save and invest regularly to achieve them. Remember, time is your most valuable asset, so the sooner you start, the better. Also, consider creating an emergency fund before investing aggressively. This will provide you with a financial cushion to avoid withdrawing money from your investments in case of unexpected events. In the end, the key is consistency. Invest regularly, review your goals periodically, and adjust your strategy as needed. With careful planning and a long-term focus, you can build a solid financial future and achieve the financial freedom you desire. Today, we've debunked myths, explored low-cost investment strategies, and highlighted the importance of an investor's mindset. But this is just the beginning. Your journey to financial freedom starts with one step: action. Don't let inertia hold you back. Start small if necessary, but start. Are you ready to take that step? Explore, learn, and apply what we've discussed today. And remember, the path to financial independence is a marathon, not a sprint. Stay informed, stay motivated, and above all, keep moving. If this video has inspired you or provided value, consider subscribing for more tips and strategies to help you build a brighter financial future. Share your thoughts and your own tips in the comments. Together, we can transform our personal finances and achieve our goals. Until next time, keep investing in yourself and your future. See you in the next video.